everyone, Kim here. Today is February 2nd, 2018, Friday. As I record this video, market should be open another hour and a half, so you should be seeing some flashing lights on your left. Welcome to the market update. Again, my name is Kim with the Traders Club. Hope you guys had a good week trading thus far. Market, we're seeing some distribution here, as you can see. We're seeing some gap down action this week. We're going to talk about that. Today we're going to stick with Spider, and I want to talk about Apple. We got some concerning signals, which I've been talking about in the past, the weekly bearish divergence. And then we'll end the video with the Twitter. And the Twitter's obviously the earnings coming up soon here. So first, let's talk about Spider here. You can see we had this gap down. The gap is not filled. I don't know why they have the long wick here. There's no wick here. There's a gap, but there's a little bit more to it. I have some screens here right there. Okay, so this chart, this was actually screened yesterday, right? So yesterday night. This is 65-minute chart of the S&P 500, so you can really kind of zoom in, see what really happened on the gap, because I want to talk a little bit more about that. So what happened was we initially had this gap up, right? You see that gap up, right? So that was a gap up. And at that point, we weren't sure if that gap is actually representing a continuation gap or exhaustion gap. You really never know until we see how it resolves afterwards, right? So this gap up really made that move to the upside. You can see that upside there. We got bullish move and kind of buyers coming in. And you see that one last just whoop of that intraday bullish action. And then that was kind of the top there. And then you can see we started to kind of fizzle, and then the weakness came. And what happened was and this was what? This was 30th of January, right? The last day, or yeah, 30th of January. What happened was, and then on that morning, January morning, 30th January morning, we saw this gap down. You see that gap down, right? So we saw that gap down. And that's the level that is coinciding with this gap up level, right? So now with this gap down that we saw on the 30th of January, we can now categorize this gap as an exhaustion gap, right? Definitely that was an exhaustion, right? Exhausted. That was basically what it means. It was that one last whoop of that thrust before pulling back. So with that, in that process, you see this gap. Now we have cultivated what we call a island reversal, right? This is an island, right? We got the gap up, we got a gap down. This whole level, this whole area is not an island. So that's an island reversal. And ever since then, there's some fizzling action here, came down, bulls trying to, gap it back up here, trying to fill this gap. What the bulls really needed to do to kill this downside pressure or even kill this island reversal pattern, bulls, what they needed to do was they needed to get up here and fill this gap and then maybe consolidate and then continue higher. The longer this gap opens, this island reversal is going to take charge and bring this thing down even more. So you can see we saw the gap up. Bulls attempted to fill the gap. There's a lot of selling pressure, came back down. Bulls tried again to fill this gap and get up, but failed. We came down yet again, right? So you can see this prior band of resistance or prior support has acted as resistance, which is coinciding with the gap area. And now with this another gap down this morning right here, you see that? Now that island reversal is strengthening, right? Not only that was an island reversal, we also have a textbook bearish harami. If you don't know what that is, you can just text it. It doesn't always work out. I don't do too much candlestick analysis on my videos because, sometimes it means nothing, right? That you're right here. This was a bearish dark cloud cover, really became nothing, right? This was a bearish engulfing, really was nothing. It continued high. It was just continuation pattern until you see some of these candlesticks play out, they really don't mean nothing, because the trend is not going to change with the 1 day decline. But now we can see as of today that this was a bearish harami, which is coinciding with the what? Island reversal, right? And then we saw a confirmation of that island reversal gap down is now a breakaway downside gap. And this, we can categorize this gap today as a continuation gap. So now we got these downside gaps, right? So what these downside gaps represent is these buyers, right, who has been just chasing this last month or so. Something that I've been talking about, not just talking about it now, I've been talking about that. You guys remember. Make sure to watch the video that I posted last week, right? The special report 2018, what to expect in stock market, right? Make sure if you haven't watched that last week, watch that. I go through more of a long-term analysis, comprehensive analysis, and kind of go with technical analysis to forecast a possible scenario or possible outcome of what to expect this year. But anyway, so something that I've been talking about is because we saw this kind of a panic buying mode since like December, right? Since panic mode, and now these top chasing, this hasty emotional bulls are now just exiting in panic. So that's kind of why we saw that these gaps here. That's what we're seeing, these gaps. And now we're trading below the 20 10 EMA for the first time. This has been for a while now, since really back in November. This is the first time we're trading below 10 EMA. So we're trading below 10 EMA. Not only the 10 EMA is down, 10 EMA is curling down at this point. So that's kind of like a minor term analysis. I think as of today, I have to say that the minor term sentiment is neutral to maybe bearish, with intermediate term sentiment still bullish, right? Intermediate term, primary term obviously bullish, intermediate term still bullish, minor term we're getting into neutral to bearish sentiment. What we don't know for sure is that are we going to maybe start to form some kind of a topping pattern, right? We haven't seen that in a while. We used to see this kind of stuff happening all the time. I think back in 2012, 2013, market will go up and we start to form these kind of like maybe double top, triple top, head and shoulders. Maybe we'll do that for like a month or two before seeing a correction. We actually haven't seen that since 2016. Pretty much market will go up and pull back and go up like this. So maybe there's a possibility. It's tough to say as of today, but I think that would have been more a possibility if this thing would have just start coming down without these gaps. But I think these downside gaps is going to make things hectic for the buyers in the minor term. Let's look at a little bit of longer term chart here. This is again, this chart was screened yesterday, last night, before the move. Right now, obviously, we're trading around at 278-ish. So what we can see right now is that, I put a fib here, down here. And so some of these levels could act as strong support. I think the really important level to watch is a 265. Should the price continue lower, I think 265 is going to be act as strong support. Let me explain to you why. Because looking at this bullish move here, since late August, right, 2017, right? What we can see is that this is a level, is a 50% retracement. Do you see that? 50% retracement right here, right? About 264. 50% retracement, there's a gap as well. You can see there's a gap, 50% retracement, and it coincides with this rising resistance that flipped that support. Now we can call it a pivot, right? So that's in that vicinity. 265, we got the 50% retracement, and we got the gap. Not to mention, we have 100 SMA residing in that vicinity. Keep in mind, last time in September and late September and August, or late August and in late September, that 100 SMA did act as strong support before this thing made this kind of move here. So we got all these technicals are colliding in that vicinity at 265. Again, it's too early to say as of today. We'll continue to monitor this and we'll follow up. But I think if the price sees much further decline, which I've been talking about, that there's going to be about 5 to 7% correction on my articles I've been talking about here and here, right? 3 weeks ago I talked about be fearful when others are greedy. I talked about could be about 5 to 7% correction coming, and also talked about a week ago cocky bulls buckle up, because I forecast that the volatility could coming back into the market. So 5% would be somewhere, I think, about around here, and 7% about would be 264. So we got 5% correction from the up top here would be, I think, 269-ish. 7% would be 264-ish. 10%, which is also a possibility. I think that's the worst case scenario. I do not see S&P going lower than 10%. I think 7% is likely, 5% possible, 10% worst case scenario is that level right at 260, which is also coinciding with this gap at 260. I think like 200 SMA is possibly residing near that level. Also, if I kind of go to, this is a weekly, so again, this was screened yesterday. You can see we also had the rising uptrend support. I think that's the level that is kind of coinciding with a 260 as well. You see that 260 level. I think this starts to fall back. I think that 260 level is going to be in that level here. So I think what you also want to see, this is a weekly stochastic. This thing start to come down a little bit. You want to see this thing, like this support right there. So this thing comes down, and then when the price starts to come down, retest these levels 260. And you want to see the stochastic finding support in that vicinity. And that's how you can tell if this level is going to act as strong support or not. So those are the levels, keep in mind, keep an eye on. Currently, we're staying at 20 MA. Or 20 MA did act as support back in November 15th, as you can see right there. That's a 20, and we're currently at 20. We lost the 10, we're at 20. So if we do see a bounce from here, maybe intraday, we do see that gap here, right? So that gap, as long as these two gaps remains open, there will be a lot of selling pressure. So what the bulls want to see, if you're long here, you want to see these gaps get filled, so that we can that the bulls can kill these selling pressure. But as long as these gaps remains open, these downside gaps remains open, it's going to be hectic for the buyers in the minor term, right? Let's go to Apple here. Apple, it's just crazy how a lot of shenanigans happened last night on the earnings day. And so there's a lot of fluctuation after hours yesterday. Well, today we gapped down. We're seeing another 3.5% decline today. Well, this is actually raises some caution. Actually, I wrote an article, I think like a couple months ago or so, why I think there's a caution looming on Apple. And recently, recently I talked about how, I think this was, when was this? Just a couple days ago here. Apple's kryptonite year on Thursday after hours. If missed, things could get ugly. Basically, I was talking about this chart right here. This is what we call what is known as weekly bearish divergence, right? This happened in 2012, happened in 2015, and then now we're here at 2018. I mean, I've seen these patterns get nullified. For this to get nullified, the price starts to consolidate and then continue higher, right? But right now, let's actually check updated chart here real quick. So if we go to weekly, right there. So this is the weekly. You can see with that decline, we're still cultivating. We're still in the middle of this kind of a bearish divergence. It's not as clean as 2012. This was a very, very potent bearish divergence. You see how clean that is, right? Peak to peak, value, peak to peak here, higher high, lower high, very, very potent, very clean bearish divergence. In 2015, we did have that bearish divergence, but not as potent, not as strong. I think that's what we didn't see as much as a selling pressure as it was in 2012 and 2013. It was kind of like grindy pullback. we have something like that similar. I don't think this is as potent as a 2012 type of bearish divergence. This looks a lot like kind of a 2015. So I do anticipate if this thing does continue, and we're technically, you know, making higher highs here, you know, with so I think at this point though, we still want to give, I'm not long on Apple, I'm not short on Apple, I'm just kind of watching. I'm actually hoping to see Apple to come down, maybe retest some of these lows, right? So I can start accumulating positions, but right now I'm just kind of watching here. So as far as the trend is concerned, we are technically still in an uptrend. We do have that weekly bearish divergence warning, cautionary signals, and we do have 200 SMA in that vicinity, right? 200 SMA did find support right here. You can see back in November 10, 11, and then September 9, 2016, 200 SMA definitely did act as strong support. So probably we might find some support here. Same level is coincident with that gap area. This level, that gap is still open. So that level is probably going to act as support. And I want to continue to keep an eye on Apple here. So if we can have to hold this and then continue higher, maybe consolidate, continue higher, and resume uptrend, then that's good for the investors. But if we start to kind of, you know, start to fizzle here and then maybe come down to some of these level and then maybe throw something like this, you know, maybe, again, it's too early to say. I'm not calling that's what's going to happen. But if we do something like that, we don't have a lower high yet on Apple, right? We have higher lows and higher highs. Trend is still intact with cautionary signals on that weekly bearish divergence that I've shown you, that I've just showed you. But if we start to kind of get up and it fails to make new highs, and we create lower high, and we start to kind of get below this, let's call this as a neckline, and we start to get below, let's say that 100 SMA act as resistance, right? So we got the 100 SMA acting as support, 100 SMA acting as support, and then this thing gets up at the 200, and then we hit that 100 SMA acting as a resistance, and this thing falls back lower, below the 200 SMA and below the neckline. I think if that happens, this thing starts to come down maybe 140s and lower. If that's the case, I think that weekly bearish divergence is going to start to play out. And what you want to see at that time, you want to see these oscillators coming back down to the oversold vicinity before start to kind of thinking about preparing to start a new fresh position or adding. Or if you're a long-term investor, you've been holding for a while, maybe adding. But if you're out of Apple and if you want to kind of, you know, kind of start a fresh position. Right now, I'm not long, I'm not sure. I'm just kind of watching their Twitter. Twitter did see some phenomenal move here this week. We've seen a little bit of pullback today. You guys know that I've been long Twitter since 20, right? I wrote an article. I'm a long-term investor on Twitter and Twitter at 20. And keep in mind, obviously, you know, this is my investment position. I'm not going to be day trading this. I'm not going to be closing out positions on Twitter just because we see some volatility. I do have a pretty sizable position on Twitter with shares that I started accumulating at 20 here. And so a pretty good move here, about 40% ever since then in just a couple months. That's a great return. However, we do have earnings coming up on February 8th, 2018 before open. I will be holding full. If we do see, let's say, some negative ER reaction and this thing gaps down, that is going to make things hectic for the buyers, but I don't think it's end of Twitter. You know, if we actually go to weekly chart on Twitter, you can see we've been consolidating for a while since 2015. We're finally trying to break out of this, right? You can see that we're finally trying to break out of this. This is the first time. This is first time Twitter is trying to cultivate higher high. We've been cultivating lower highs, right? You can see the high, lower high, lower high, lower high, lower high. But something changed right here. What has changed? This is not a lower low. That's an equal low. And now all we need is a higher low, higher high, higher low before this thing getting back up. So if we do see a gap down on earnings, we want to see some certain levels hold, maybe 22, 21-ish to hold some of this vicinity before, maybe filling that gap and continue higher. But if we gap down a little bit, or open flat, or if he gaps up, that could possibly be kind of a jump start for Twitter. If we can have to hold that gap or sustain that gap for Twitter to make its move here. So I mean, I really like this long-term chart here. You can see long-term resistance. We closed above it. We talked about how we made an equal low. This chart was screened when it was 20, and my oscillator making higher low, which tells us that there's this clandestine buyers slowly accumulating positions, right? And so that's kind of that sentiment we are seeing here. So long term, I still like it, but let's see how it plays out on earnings, and we'll go from there. Maybe I'll do an update on my article, but let's look at one last look on Spider. I'll let you guys go. Looks like we're still kind of we're just hanging around at the 20 here. Let's see how he plays out next week. We got the 20, 50, and 100 there, and then we'll follow up and we'll talk about some of these patterns next market update video. Have a wonderful weekend. Good luck trading next week.